I'm Jennifer Kilber, marketing lead here at Agtegra Cooperative. I'm here today with Jon Gilbert and Travis Antonsen. Jon is our Director of Crop Nutrition, and Travis is our SVP of Grain Marketing and Rail Logistics. And we're here to just have a conversation about the fertilizer market and the grain market today, and talk about how we can help mitigate some of these high fertilizer prices. So, Jon, if you could just give us a little bit of an outlook on the industry and the fertilizer market for nitrogen and phosphate.
Yeah, thanks, Jen. Fertilizer prices continue to be strong. We've seen that here for the last probably 3 months or so, very volatile. Really looks like that's going to continue. High natural gas prices in Europe, Ukraine war, all those things just keep driving this fertilizer price higher, keeps the market extremely volatile. And so trying to look at risk mitigation strategies and things that we can do through grain marketing and to kind of protect our fertilizer prices.
Sure. And if I'm a farmer, Jon, and I'm looking at the Nola markets today, how much approximately should I add to figure in the transportation cost to get it up here to the Midwest?
Right. So a lot of issues with rail. Rail logistics have been a problem here. It's driven our freight costs up. We've had to source product through some different avenues than we have in the past, and so that's driven our freight costs up too. So really, when you look at the Nola price, probably like today we're figuring about $80 a ton, plus our margin on top of that. And then the other thing that we have going on in the fertilizer markets is a strong market as we get into the new year. And so when you look at Nola prices on urea, they're substantially higher for that March, April, May timeframe compared to where prices are at today. And so there's a premium for those products out into the future.
Sure. All right, Travis, and how's the grain market looking?
About as volatile. We're dealing with some of the same things. World markets have been in turmoil with the Ukraine situation since February. Also, looking at drought in South America last year really has dropped world supplies and world stocks. At the same time when Ukraine happened, not a lot of end users knew where they're going to get their next bushel from. So prices rallied, prices have came down. Again, very volatile. I think that's going to continue here through the next year as Ukraine and the whole Black Sea region has not been resolved. We did see some higher competition on corn production out of South America here. They did have a better corn crop than their bean crop. And then everybody's also looking at inflation and what's going to do to the economic viability for some of these countries, what they're going to be able to buy, what their economic growth is going to do, because that ultimately drives commodity prices as well. So very volatile.
Yeah, not the greatest outlook. So, Jon, what would you say to a farmer who's thinking, you know what, I think I'm just going to wait till spring to buy my phosphate needs. I'm going to wait till spring to apply it. What would you say to that?
Yeah, I think definitely agronomically, we want to get that phosphate on in the fall. We know agronomically that's the thing to do. Get that phosphate into the ground, get it starting to break down, get it available for the crop next year, get the most bang for your buck, because these prices are high, and so we got to do everything we can agronomically correct to get into this next season. So definitely a concern about high phosphate prices, higher than they have been historically compared to new crop grain prices. And so we're offering a phosphate protection program this year. So we'll sell you a phosphate protection for $10 a ton. That'll limit the downside risk. So if phosphate prices fall before spring, before April 1st, we'll give you a rebate type dollar figure back on those tons that you put on this fall. And so hopefully that'll give you the confidence to do the right thing, put it agronomically. We know it's the thing to do, and it'll protect your investment if that price falls on the phosphate side going into spring.
Awesome. That's a great mitigation risk
Right.
strategy to use.
Yes.
So, Travis, I know there's a couple other ways farmers can mitigate these high fertilizer prices on the grain side of things. Can you talk a little bit about that?
Yeah, as they're buying fertilizer for next year's production, we're able to sell corn over $6 on the board. So I'm a proponent of, if you're going to buy some inputs and you have a margin, let's lock in some of that margin. We've got many alternatives out there to set a price floor and still have the upside open, similar to Jon's program on, setting a ceiling, and if the price drops, we'll give you some of that back if that happens. So I'm always been a proponent of setting a price floor, eliminating some risk, and still have some upside. And we can do that through option strategies, min-maxes, or our OTC platform, which I really, really like. And that's not even for 23. We can do 24 and 25 on getting some of those price floors set and offsetting some of that risk, and you're really locking in a margin even with higher fertilizer prices.
Sure. Can you tell me a little bit about that OTC program?
Yeah, so it's so over-the-counter contracts. They're customizable. You can structure them to make them cheaper than an option strategy that are exchange traded. Very flexible. You can adjust bushels timing wise. For example, we've been pricing 610 to 620 D23 corn with a 50 or 60 cent upside if the price does rally a little bit. So zero cost on that. So you're like today, I just ran it at 610. You can sell D23 corn for 610 futures, upside up to 660. And those prices run now through about the time you harvest it next year.
Sure. No, that's great. Some awesome insights and some great risk management strategies coming from the fertilizer and grain side of the business here today. Talk with your local agronomist, your local location manager, your local grain marketing specialist. They all have these tools in their toolbox to help you guys mitigate risk out there. So give them a call to make your plan.